Good afternoon, everybody. My name is Barbara Fischer. I'm really happy to be here today. I take any opportunity to come to Geneva. I love it here. I'm in Zurich only. And yeah, before I start with my presentation, and I don't know if you can call this training, I'm also sharing my experiences with you. I would like to share with you a little bit about the who, the what, and the why. Can I ask you, who of you has heard of me, Barbara Fischer, or Arena Ventures before? Okay, good. So, excellent. I can do the 3 slides without boring too many people. So, yeah, as I said, Barbara Fischer. I am, as you can maybe tell by my accent, German by background. Despite 11 years in Australia, I still haven't lost it. I'm still working on it. But as Fulvia rightly said, I actually have an entrepreneurial background, both by coming from an entrepreneur family in Germany, in Stuttgart, and also by actually starting my own business 10 years ago, or actually 15 years ago. No, actually more. Anyway, in 2005, I started Trendhouse, which is a digital consulting firm. And yeah, I bootstrapped that business and sold it successfully in the end of 2011. And the reason I actually implanted or inserted that picture last night, because I wanted to show you that I know what it feels like to be the only one in the office in the evening, on many evenings when the others have gone home already. And yeah, so what we did at Trendhouse is we built, basically based on Google campaigns and SEO campaigns, sales funnels for companies like BMW, Nespresso, Gillian Chocolates, and so forth in Australia. And then in 2012, I decided to come back to Europe with my family, and we decided to come to Zurich. So in Zurich, we then worked for, okay, I need to take a breath. It's amazing. I look forward to this presentation, and now I'm still nervous. So anyhow, now it's out. Yeah, we basically moved to Zurich. I worked for Swarovski as the head of digital content. I also worked in Australia in senior management positions for a company called Löwenbräu, making beautiful beers, not just the Löwenbräu beer, but other beers also. And my position before I started Arena was with Lithium Technologies. It's the global player in online communities, and they are based out of San Francisco. So I was heading their strategy team for India. Then, yeah, as I said, I founded Arena Ventures about 2 years ago, because the thing that drives me most in life, or first I explain what Arena Ventures does. I'm basically a matchmaker, so to say, between tech companies in Switzerland mainly, but across Europe. I also work with companies in the UK. I work with companies out of Munich that is specialized in finding funding and also basically assists with strategic advice for companies looking anywhere between 2 and 10 million euros, Swiss francs, pounds, whatever you like. And the way I work is I work with a maximum of 4 companies, so 4 tech companies at the same time, and we strategically basically set up the financing round and then execute it. If you want to see the type of companies that I've helped so far, please go on my LinkedIn page and check out the, how do you say that, the recommendations, or basically people who recommend you, because they are all there. So, yeah. And I also actually advise increasingly private investors, like ultra-high net worths, who put tickets of 200,000 or higher on their portfolio strategy. This is now slowly coming, as I basically, there's always a little halo effect when you basically have placed the company successfully, that basically the investors hear about it, and then now slowly the investors find me, and I don't always have to find them. So, why I'm doing this? The reason why I've started Arena is because I am fundamentally and deeply driven by growth in life. Okay, this sounds now a bit like a philosophical thing, but both in my private life, with my own family, with my balcony plants and so on, I love growth. But in business, I love sales. Like, I really love business development, and I love to see how basically I can create value for, on the one hand side, the startups that I work with, and on the other hand side, the investors. Because whilst I work with 3 or 4 startups at the same time, I see these private and institutional investors equally as clients, if you want. Okay, this business model that I have currently only works if both parties are happy. It's not just a matter of finding the money, it's a matter of finding the right money, and it's basically matching the right people together and creating long-term value, not just for the next 12 or 18 months. So something that you also need to know about me is that I eat tech for breakfast. I love that stuff. I love technology, in particular B2B SaaS. If I could pick one thing that I do for the rest of my life, it would be B2B SaaS, because I've seen it, how it scales beautifully, how it scales internationally, and how it can work. So despite all the other hype trends that I show you later, I think that B2B SaaS still has something sexy, for me anyhow. And obviously, as long as the interest rates remain as they are, and we can have later a discussion on how these interest rates are going to evolve, but I think we can all agree that for the next 2 or 3 years, they will probably not rise significantly. I think that it's happy times ahead. So that's about me. Now, I wanted to share with you the top 7 trends that I've observed over the past 18 months and that I wanted to share with you in regards to investing in Europe. Now, what's important to note here is that I'll give you a macro view, right? This is not particular for angel investing only. It will also touch on angel investing, but it's actually across the board. So I'll show you. Trend number 1, I believe that next year we will see a sharp increase in valuations in Europe, which in my opinion, and again, this is based on my own experience of being on the axis of London, Berlin, and Switzerland. Like I spent 1 week per month in London, 1 week per month in Berlin, and the rest here in Switzerland. I believe that whilst nobody in England will publicly really talk about it, there's a big, big fear, and you're nodding, I'm curious to hear what your view is on it. There's a big fear of Brexit, especially in the investment scene, maybe not so much in the angel space, because that will always remain quite local, in my opinion. But I can show you in regards to Series A, and particularly institutional investors, they are strongly looking at Europe, mainland Europe, and for some reason, and I don't know why that is, I mean, Switzerland, yes, that was one of the countries that my contacts are looking at, and I know why that is, so it's because of the crypto and Bitcoin phenomenon, but they're also looking at Belgium. When I go back next time to London, I need to ask why Belgium, I forgot to ask, but that's the theme I hear. So mainland Europe, in particular Switzerland and Belgium. Then secondly, I see a lot of private money coming from Russia into Berlin, because I spend a lot of time there, and I spend time also over gin and tonics in the evening talking to people about how they see basically the future of private equity and venture capital, and they're telling me there's a lot of money coming from Russia, or I see it, that's being invested, and it's being invested quickly. Like 1 million tickets, like this. Anyway, I could tell you stories, but it's a bit too far and too much for this presentation. Then, second trend, increase in European private equity and venture capital funds. I've just picked 2 of the Twitter tweets or LinkedIn snippets that I see every day. I don't read the news, just so you know, but I do read LinkedIn and Twitter every day, 10 minutes in the mornings and in the evenings. This is just something that I've seen. What's interesting, for example, this fund here, the 60 mil fund, is driven by a family office. Think about it. And I see many funds being basically family offices launching funds, whether that's micro funds at 10 mil or larger funds at 30 mil, 50 mil, but this is what I see. And then the Hummingbird guys, who are a really fantastic team in London, they have now set up their 3rd fund. I know just of 8 contacts alone, like when I was in London 2 weeks ago, who tell me, yeah, Barbara, we are now moving our 2nd or 3rd fund to Luxembourg. Business in Luxembourg for lawyers and asset managers is great, I can tell you, because I'm currently looking at launching my own fund, and the way that people treat you on the phone, lawyers and so on, is like, yeah, we can still do with more business, but it's not like they have not enough business, you know what I mean? Like they have a certain attitude, in my opinion. So, yeah, trend number 3, shift in emerging technologies. I wanted to ask you, who is familiar with Gartner Hype Cycle? Yeah, see it. So if you're not familiar with it, just Google it. It's quite heavy on the eye, I find. It's quite heavy to digest, but what I wanted to I mean, by all means, Google it and have a look at it, but what I wanted to share with you now is the Fischer hype boxes, as I call it, because I didn't want to do a trending thing like that I see. And again, this is based on my own experience. I see per month between 50 and 60 decks of different companies, in fact, 50 and 60 that come from my network. And so I'm just sharing with you 8 boxes that I see, okay? And you can tell me what you see. So, beautiful age tech, for example, e-commerce platforms for nappies for older people. I've never thought about it, but for example, that's one example that I can just tell you, which is working beautifully. When you think about it, elderly people, they don't grow anymore, so you have repeat business. Nobody wants to be seen with nappies coming out of the cord or whatever. And it's basically something that is good. It's a fantastic repeat business until the person dies or whatever, or something else happens. So that's something that I see there. Or for example, another one, drones that protect people, like drones that come when you press a button, or like, I mean, I'm not the biggest fan of the drone topic, but so that's the kind of things that I see in age tech. Then, ed tech, I believe that in the future, the way we learn is going to change drastically. I give you an example from my own life. In the evenings, because I've got nothing better to do, I'm doing a class with the University of Washington about how to set up the perfect term sheets, like valuations. This is how I learn, because I'm by background a technology and online person, if you want to, and this is something that I learn. But I believe I can learn anything I want, and EdTech is, I find, a super sexy topic in that space. So then AI, big data, everybody's using the word AI. So there's certain terms that I'm sometimes a bit bored with, like machine learning also, because everybody's got a different perception of what is AI. But for sure, it's something that is going to stay. Then InsurTech, in the fintech space, I think now is the time for anything InsurTech, especially London is booming like crazy in that space. PropTech, anything, for example, I give you one example that I found really great. It's a Swiss company, I forget the name, but the model I remember. If you don't have the money to invest in your own home, let's say 2 or 3 million home, Swiss franc home, there's platforms where you can actually co-invest in houses and rent them out. So platforms like that. Or for example, in the UK, I remember there's a startup that does basically insurance if you default on your lease, how do you call it, like deposit, the lease deposit, so things like that. And they work beautifully from what, I mean, I'm close to the people who manage it, so yeah. Then crypto, I think we all agree on that one. And what's interesting for me for next year in that context is to see, I see already, I think we all agree that the Bitcoin topic and so on, that Zoop has already taken sort of the, I don't know, from a PR perspective, they are the leaders in that space, right? And what I see now is already in Geneva and in Zurich, similar activities, because there's not the rivalry now between countries, but the rivalry between cities. So, but the point I want to make here in the crypto space is when I talk in London to people about Holger Feldmeier or Richard Olsen from Lücke, you don't need to say the company name. They know exactly who they are, and they will rise further. So, yeah, mobility and smart cities goes without saying. I think that we have the entire space of clean tech also falls in that space. And then what I see also is government tech and red tech. I'm like, from time to time, about 10% of the decks I get are in that space. So I think this is what's going to come next year. And of course, like as I said, I'm also interested in your view on what you see. So then, corporate venture activities in Europe will further increase, and it's a no-brainer in my opinion, because obviously all these large offline players want to take a part of the tech pie, or want to see how they can basically leverage tech for that. The big players, obviously global players in that space, the top 3, just for your information, because I've read a statistic on it, are Salesforce, Intel, and Google. So they are amongst the top 5, if I remember correctly. Then for Switzerland, you have obviously Novartis, you've got the Swisscom Ventures, you've got in Germany Bertelsmann and different other players. But corporate venture is going to become increasingly important. What I find interesting in that context is also the type of services that you see that come out of that increased interest from corporates into the venture world. For example, in Berlin, I work with a company called Redstone Digital. They offer venture capital as a service. So what they do is, for example, they've helped Deutsche Bahn set up their mobility fund. It's a 100 mil fund that was launched about 6 months ago, I don't know. But they also work, for example, with Volksbank Berlin, they work with Daimler and so on, and they help corporates set up their venture capital arms. So then, impact investment. Who's familiar with impact investment? What does it mean? What it means? Okay, all of you, most of you. So basically, impact investments and or so-called social investments, you call them sometimes, also have a small multiple. So they only have typically a 2 or 3 times multiple, sometimes no multiple at all, no financial return. But they need to have an impact in regards to the environment or social impact. So the reason why I say that this is driven by banks is that I have got a number of wealth managers or bankers in my ecosystem, and they are all basically coming up with programs and with initiatives around that topic. What I heard by what I know, the managing director of one of the private banks in Zurich, and she told me that, and this was for me quite amazing, I don't know, maybe for you that is obvious, but for me that was amazing, that this trend is driven by the generation who are 40 and below. It's not driven, because I would have thought, like, for example, my parents are around 70, they are entrepreneurs, they've got their nice income and so on, so I would always have thought that it's people like that, 60 plus, who have got the time and so on, who drive that, but it's actually the 40 and below. So for example, Elon Musk, you could call him a social entrepreneur because he's working on a car brand that you know that is not yet profitable, and we'll see if it will ever become profitable, but he wants to have an environmental impact, and that's why I would categorize him in that respect also as a social entrepreneur. The big issue I see is that whilst you can measure the environmental impact by CO2 emissions or water, cleanliness of water, things like that, you cannot measure, or I don't see, number one, even in that space, I don't see international standards yet. You even have a discrepancy between, for example, I was involved in an impact investment 6 months ago, and there you have investors from Austria who have got very different standards from the investors in the UK. So then, even then within Europe, you have got already a bit of a mix of expectations, but globally, you have that even worse. So, and then what comes on top is that how do you measure parameters like happiness, right? Nobody has yet come up with a good solution. How do you measure contentment, happiness, all these more sort of soft factors? And there, I haven't even seen any approach yet on how you measure that, but it's an important one too. Okay, so trend number 6, interesting to you probably, is that angel investing, I think we can all agree, it will remain a strong pillar. But next year, I think there's going to be changes ahead in the sense, and I tell you from my own experience, because I now get calls from people, like for example, last week I got a call from a founder in Berlin. They are pre-revenue, okay, pre-revenue. They are raising the first, they've put in 250K themselves. She has put in 250K. They are now raising 1.1 at a valuation of 3 million pre-revenue, okay? So when I heard that, I don't know if you think that's maybe it's a fair valuation, maybe not, but I've been around in 1999 and 2000. I was working for ABN AMRO in Munich at the time doing seed stage investments, and I saw these kind of things where you had valuations based on little or no revenue. And it depends on the sector you are in, but typically, call me old school, I am a big believer in clients and customers and serving them properly and having repeat business. So that call last week made me already a bit like, because I said to her, are you sure that you want to go for that amount? And are you sure you want to go for that valuation having no customers? She said to me, yeah, we have got great experiences in beta with 17 potential customers. I said, it's good for you, but how about you convert them first and then come back again? But the thing is that she's not the only one. I was in New York 2 weeks ago at a tech conference holding a speech, and afterwards some entrepreneurs came up to me, same story, that was in sports tech and so on, but exactly the same. And I don't know, would like to hear your view on what you think, if that's alarming, but for me, little bells are already starting to twinkle in my ear. So I want to show you, I mean, the bullet points that I had before. Here you can see the stat from the European Venture Capital Report. Yeah, I'm nearly done. So we will see around a rise in the round 1 to 5 mil. The smaller rounds up to 1 mil or between up to half a mil are going to decline. And then the larger seed rounds are going to increase. And it's not because of that statistic that I'm saying it, but it's because of what I'm seeing. And again, you can tell me in a second what you think. So last trend, physical presence and the borders are increasingly meaningless. I don't know how you work with your partners or clients or startups, but this is actually a photo I took, or a screenshot I took 2 weeks ago when I was in Berlin, in an office in Berlin, with a Swiss entrepreneur called Mike Schwede on the way to Geneva, actually at the time, in the SBB, and a New York investor. And this is how I work. Basically, my office is where my black bag, it's now in the other room, but this is what my office is. And I believe that our physical presence, except for maybe when we are meeting with the lawyers and the term sheets, etc., is becoming increasingly insignificant. So, yeah, just to sum it up, I don't need to read this whole, there are 7 points to you, but what I firmly believe is that investing now and before Christmas could be a good idea, maybe, because of all the money that is going to come into the market, and in particular also Switzerland. I think maybe the investments now could still get you better valuations. Overall, way more money looking at the same amount of deal flow, because yes, whilst I believe there will be more money coming in, I believe that the deal flow is what it is, not more startups are going to, or maybe, I don't know, maybe more startups are going to be invented, I don't know. Yeah, and as I said to you, angel investing, I think it's still going to remain strong, but it will see changes next year. So yeah, thanks a lot for your attention. And yeah, now I'm curious to hear what your opinion is, or what you see basically trending for next year. Would you like to? Did you want to say something, or you just waved your hand? Yeah.
Okay.
Yeah.
So, well, thank you very much. Should we give her an applause first? So, I was interested in legal tech. It's an area where people are saying, yeah, legal tech is now where fintech was 5 years ago. It's going to be huge.
Yeah.
But you're not seeing that in the metrics yet.
But don't you? Okay, so legal tech, yeah, absolutely, I see it. But I would cluster that under the crypto and Bitcoin, distributed ledger bucket, if you want to call it that, or box.
No, for me, it's just how lawyers work. It's it's even more old-fashioned than banking, and there's a lot of standardized stuff there.
And you see a lot of startups in that space?
So that's exactly why I'm asking. We're getting a lot of noise in the media that this is coming, but we're actually not seeing many applications. I was wondering, is it because Geneva is slow, but maybe you're not seeing it in Berlin or London?
I'm not seeing, I can just tell you what I see, from what what people send to me from my own network and so on. I don't see it so much yet. I see it sometimes when I go to Bitcoin or crypto events that people talk about it, how contracts are obviously going to become part of the distributed ledger chain and so on. But to be quite honest, the crypto topic, whilst, yeah, for sure you can make a lot of money in it, like me, I need to be grabbed by my heart or by my stomach. It doesn't grab me enough, so it's not something that I will follow it, but I will not follow it for investors, because unless I'm basically completely convinced by it, and unless I'm convinced that it's a medium to long-term smart investment that will bear the fruits, I don't touch it. So, but yeah,
Maybe we need another presentation on ICOs at the next SICTIC.
Yeah.
But it's interesting because you say everything is now online. Only the lawyers useful to me, which tells you something. But interesting, SICTIC just wrote on press yesterday, having led a round with the ex-chairman of US in a legal tech in Switzerland, Afiax, which is a compliance, a Zurich-based one. That was a company presenting there. But we can say from SICTIC side also we see a few deals there, but it's a bit more complex. Yeah, it's complex to replace it, and it's not so easy to get a contract online and to replace your lawyer. There's so much risk attached to that. That's what I would say.
Yeah. And what else do you see? What do you see as part of SICTIC in terms of buckets?
Okay, good. That's a different stand-up presentation from my side.
No, but I mean, can you use?
No, first of all, thank you also for your talk. It's very interesting. So I tried to line up our startups today in one of your hype walks. And probably the crypto ones you don't have because they come on the FinTech day. But we have something in AI. We have something in different other topics that we are looking forward to that. Yeah. No, but here we did a study of all the startups which applied. And for example, today we have selected 8 out of 45 which applied. If you go, we do 15 events. Therefore, there's a lot in AI at this point, and virtual reality, big data, fintech is huge. The fintech is a huge topic.
But when you say fintech, can you be a bit more? I mean,
yeah, it starts from what I just said, also where you have contracts as more legal tech, to stuff where you have ICO building platforms, Leaker, for example, applied at SICTIC. Yeah, that's very good.
okay.
But Barbara, questions for Barbara.
Yeah.
Do you see any trends in medtech in Switzerland? In terms of what investors are doing?
It's huge, but the rounds are typically larger. I find that they often immediately go for tickets of 8, 10, 15 mil and so on. So I don't see so much medtech, to be honest. But it's I mean Switzerland that's the big market for medtech.
So do you see a big difference between Geneva or Swiss Romand and the Zurich area in terms of ease of raising money for companies?
I know, you know what? We'll take 2 more questions, so just get in there quick. We'll take 2 more.
So Romandie, I see nothing because I don't have my network there.
Oh, you don't?
So, but Geneva and Zurich are equally popular, busy, whatever. Yes.
You said that things are going to change with business angels investing. How? What is going to change?
Just in terms of
follow your that you noticed these very high valuations without any.
Yes. So in the end of the day, if you take the logical next step, is that for the same money, and if the amount of startups remains the same, you pay more for the same. I mean, you pay a higher price for the same company. That's what it means. Could mean.
Last one.
If it means anything, we've seen exactly the same thing in the West Coast of the United States for the last few years, and in China where I just spent the last 8 years. So far too much money coming in from far too many sources, you get exactly that. You get stupid valuations, and it prices a lot of people out of the market. And then the return you have to make is it just gets tighter and tighter. But there's a lot of money that's desperate to go somewhere, and so they go in.
Yeah, but
it's depressing actually to hear that.
Yeah, exactly. For me, it makes me a bit sad already. But anyways.
So thank you very, very much. You probably are the only person that describes B2B SaaS as sexy, but that's we'll forgive you. And thank you so much for putting that together and explaining what you're seeing. Thank you.